Hello traders, welcome to your daily market update for Wednesday the 29th of April 2015, and we've seen the US dollar get hammered overnight, losing 1% from the euro, 2% from the Australian dollar, and the momentum really has started to shift to the downside as the market looks ahead towards the FOMC statement later tonight. I should note though that the Fed chair won't be attending. There isn't any press conference and Q&A after. And generally, when that's the case, it is a fairly subdued meeting. This really won't be the case in this one, as the market's really focusing on what the statement has to say, and you can tell that from the one-sided, one-direction moves in the market leading up to this event, and it's quite extreme moves as well, considering just the data and the amount of volume that we've had coming through. And you can't argue the fact that the market is really shifting towards a dovish statement expected from the Fed. And we have that coming out now. What I think that the Fed's really got to be challenged with is its statements and the carefully choose words. Like if the Fed uses a relatively upbeat statement and confirms that there's a liftoff in 2015 and possibly even indicates what month is likely. I doubt that'll be the case, but it could reassure the market, and if the market is reassured that expectations for a tightening in September is unchanged, well, I think that the US dollar could actually get a big bounce, and optimism could jump back into the US dollar. And everyone would put behind them the data that's come out recently that hasn't met expectations and really look towards the future. However, if we do see a dovish statement and they talk about how weak the data's been recently, they'll talk about how high the US dollar is and things of that nature. I think that the US dollar could really accelerate its selling, and we could see some drastic moves. The currency pairs are at some key technical levels as well, so all the ducks are in a row for this to be a decision-making statement for the direction for the next few trading days, possibly weeks. So it's going to be an interesting one, and I have a chart here I want to show you from Kathy Lynn. Now, she's put this up, and it's quite a good visual representation that not all the data has been negative. We do have green in there, and you could say that there's more green than red. However, the negative tone from the US dollar has been the fact that key data like GDP, consumer confidence, non-farm payrolls, the major areas have all been, CPI, have all been worse than the market would have liked in the key areas. So that's why the data has been negative. However, as you can see from that, it's not an all doom and gloom, report card, and the Fed may actually put the data of recent behind it and say, look, that's just a one-off, or things are set to improve, and then from that we should see some US dollar support. I'm not putting my 2 cents in just yet on what I think the Fed statement will say. I think that the best thing to do is to wait for the statement to come out and look to trade it from there, because really guessing what they're going to say is just like going to the casino. If you're a short-term trader and we do get a dovish FOMC statement, we could see 2 to 3 days of selling following that. So there's going to be opportunity to get in short, even if you miss the initial market's reaction from not trying to preempt what the Fed's going to say. So I think that's a better move. Just after that, we do have some New Zealand data that the market's going to be heavily focused on as well. The New Zealand interest rate decision. It'll be interesting to see what they've got to say. And leading up into that, we do have gross domestic product, and we do have some home sales out of the US. So the US dollar's still in focus, very much so. And I think the European session, having some lower tier data out, will purely be focused on the US dollar. There's nothing major in here that's going to really captivate the market until then. So technicals will be in play until that data comes out, and I think flow will continue on from yesterday's market lead. Now, as you can see, the US dollar index has broken major support. That's a big sign. We are trading below the 50-day moving average. There's no doubt that the bears have definitely taken control, and the moves are quite large. So it's going to be quite interesting to see where we go from here, and it definitely opens up more moves to the downside for the US dollar if we do get a bearish policy statement from the Fed. Having a look at the technicals, we did just get really good trade balance coming out from New Zealand. So I think that the trade balance and all the trade figures can offer support for the New Zealand dollar into the future. Now, we've seen it trade above 77 cents. 77.5 cents is major resistance level. Once again, it has been support, and I think a break above that is possible with a weak US dollar, and given that the trade balance was almost double what the market expected. It's just that everyone's asleep right now in the world, just about, except for Australia and New Zealand. So I think that will start to get priced in as the market looks ahead. The Australian dollar has broken above the major resistance level, so we are technically in an uptrend now, and that's because we've made a higher swing high, and we've got some higher swing lows. That major level, if I zoom out for you and put in a trend line, you'll see the trend line's been broken as well, but that's been broken for a while. So for now, if we do get a continued weakness in the US dollar, and I think that we could see moves higher. 80 cents is just a really big psychological level, and if I'm on the 4-hour chart right now, we've just tapped above it, but as the US session came to a close, we're starting to pull back, and we're back below 80 cents. 80 cents is a big level, and I think that the Australian RBA will be squirming a little bit with the Australian dollar being in the 80 cent area and above. So it's going to be interesting to see how the market reacts. That is a big psychological level. If we do get a very positive Fed statement, the market will sell the Australian dollar quickly and keep it under 80 cents, I think, because right there, the Fed it'll be quite interesting. And I also think the New Zealand dollar, if it breaks above and has a big rally, I think they'll be quite unnerved about the New Zealand dollar. The euro is still below $1.10, but only just, and this major resistance level is still yet to be broken, but it's all going to come down to the Fed, so it's another key level. If we do get ourselves a very positive, this area will be rejected once again, and we'll be making our way down into this zone over the next few trading days. So keep an eye out for price action. This is another key level to keep an eye on, and if the market breaks it, well then I think that we're going to see a few days, and we could come up and test this area up in here of rallies should we get a very weak Fed statement. I'll have a look at the US dollar versus the Swiss franc, and I'm only doing that because the brokers have started moving their risk tolerance for the US versus the franc back to normal. So we can trade that as we used to be able to, without additional margins and all the handicaps that were put on top of the currency pair from the SMB disaster that you can see here that wiped out a few broking firms and a lot of trading accounts. We've seen this huge support level here just really hold up at 95 cents, and it's interesting, it's still held up, but if we do get a weak statement, this support level could be broken, and you could actually get in some shorts through here. And considering it's consolidated since March, that's quite a big consolidation, and I think a breakdown could see some fairly large moves as well. So it's something to keep an eye on. The Great British Pound is just storming ahead, and as you can see here, we're trading above $1.53. $1.54 is in sight. It's all going to come down to the Fed. This is the next major resistance level. This is the major support level here at $1.51.8. So we are very much seeing a big run for the pound after its positive statement from the UK ministers and the weak US dollar. The US dollar versus the CAD, it's very interesting. I have pulled the Fibonacci, but before I get to that, that's the major support level that was broken. Then we had a bounce, and then we're faded back down again. I've been shorting this. I have just taken profit, and I'll look to adjust and trade this after the Fed's statement. Now I'll go to the weekly chart, and it's just to show you that this big move here, and I have pulled a Fibonacci, and we do have a fib level here, $1.20. I'm very interested to see what happens at $1.20. It is another key area. If we do see a weak statement, we could move down and test the Fib 50 level. And if we do see a positive statement from the Fed, we could see a bounce off this level and the US dollar rally to offer some support at $1.20. So that's something to keep in mind on a technical basis there. The US dollar is still, versus the Japanese yen, is still traveling around the 19 cents at 119, sorry. And we should just take note that the major support levels, we could see this actually collapse down into $1.18 if we see a weak statement. If we see a positive statement, we could see a bounce and a run towards $1.18. Still in the consolidation phase. I'm not calling that this statement's powerful enough to break out of that consolidation just yet, unless they do tell everybody when they're going to raise rates, which is a very unlikely scenario. Well, that's it from me today. Trade well and be patient. Don't try and guess where the market's going to go. There's some key levels there. Generally, when the market's in this sort of situation, I like to let the market tell me where it wants to go before I start pulling the trigger and getting trigger happy with the keyboard or mouse. I suggest you do the same. I'll be trading with my students or having a webinar with my students throughout the European session. So I'll be back again tomorrow. Until then, trade well.